Good day. I'm Abolore. On today's episode, we'll be looking at question solving on manufacturing accounts. So, in our previous episode, we've looked at the meaning, the terminologies, and how manufacturing accounts looks. That's the format. So, I would advise you watch the first episode, then you come back to watching this, and you will have a clear understanding of manufacturing accounts as a topic. So, without much ado, let's dive into action by solving the question for today. So, excuse me, I have a question here, and that will be displayed on the screen for everyone to see. So, I read: the following information were extracted from the books of Lucas Limited for the year ended 31st March 2020. So the currency given is one of the West African countries, I guess. It's D sign, yeah. So stock, 1 for 19. Raw materials, that's opening stock of raw materials, 80,000. Work in progress, 15,000. Finished goods, 59,000. Purchases of raw materials, 150,000. Sales of finished goods, 590,000. Carriage on raw materials, 4,000. Excuse me. Manufacturing wages, 30,000. Royalties, 10,000. Factory expenses, 6,000. Salaries, 20,000. Rent and rates, 12,000. Delivery expenses, 4,000. So additional information now. Command figure 1. Goods were transferred to the trading account at a market value of 390,500. Additional information 2 now. Stock, 31st 3rd 20, that's closing stock of raw material, 6,000. Closing stock of work in progress, 14,000. Then finished goods. So all these are closing stocks. Finished goods, 26,000. Then 3 now. Salaries, rent and rates are to be apportioned between factory and office in the ratio 3 to 1 respectively. So you are required to prepare manufacturing trading profit and loss accounts for the year ended 31st March 2020. So we are going to be treating those additional information. Additional information 1, we were told that goods were transferred to the trading account at a market value. So in our first episode, we did talk about market value or market price, and that's what was given as 390,500. Then additional information 3, we are going to apportion salaries as well as rent and rates. So we're given 3 of that salaries we go to factory, and 1 we go to office expenses, and 3 of the rent and rates, 3 ratio 3 of rent and rates we go to factory, and 1 we go to office. So we're going to be treating that while we're in the process of solving the question. So let's begin by solving. So I think I need to divide the board. So we have this. So the name of the business is Lucas. So you write the name of the business, very important. Lucas. So Lucas Limited. Lucas Limited. Then the accounts we are asked to prepare. That's manufacturing, 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 trading, profits, and loss accounts, and loss accounts for the year ended 31st March 2020. So this is basically what we have. So this heading alone could fetch you 1 or 2 marks. So the heading has to be intact this way, basically. So let's start. So we have the currency sign, the 2 currency sign. So this is the currency sign that was given in the question. So let's start with the opening stock of raw materials. So opening stock opening stock of raw materials. Opening stock of raw materials. That's given us at the beginning of the question. It's given us 80,000. Then we have purchases. Purchases of raw materials. Purchases of raw materials. That's given us 150,000. Then we had add. So there is carriage on raw materials. So we are going to add that as carriage on raw materials. That's given us 4,000. So there is no return outward on raw materials, or there is no return on raw materials. If there had been returned, we would have bring that in. Then let's see from this. So now that there is no return, we will just add these two, and that gives us net purchases. Net purchases of raw materials. Net purchases of raw materials. So this plus this, that gives us 154,000. Then we had our net purchases with opening stock. So that's, 80,000 plus 154,000. So that gives us, 154,000 plus 80,000. So that gives us 234,000. So we call this costs of raw materials. Cost of raw materials available for use. Then we less our closing stock. Less closing stock. Closing stock of raw materials. So the closing stock of raw materials will be given in the additional information, which we are given here, and that's 6,000. So it is of raw materials that we are going to use. So that's 6,000. 6,000. Then we less that minus 6,000, and we have 228,000. So we call this costs of raw materials. Cost of raw materials consumed. Cost of raw materials consumed. Then we had direct costs to it. So you can make a reference to the first episode. We've talked about all this, how prime cost is arrived at. So we want to get our prime cost now. So we will have direct costs. So our cost of raw material consumed. So in this question, the direct costs that were given here, I think, okay, we have manufacturing wages. So we had add manufacturing wages, which we also said is the same thing as factory wages. So manufacturing wages is 30,000. Then any other one. So we have royalties as well. So we have royalties. Royalty is also direct cost. So royalty paid, that's 10,000. So there seems to be no other direct costs. So in the absence of that, we had all these together. Then we arrive at our prime costs. So prime costs. So that's 228,000 plus 30,000 plus 10,000. That gives us 268,000. 268,000. So these are prime costs. Then we had our factory overheads. So factory overheads. So factory overheads here, we have factory expenses. Okay, factory expenses. No treatment on that. So we just bring it here, factory expenses. We put it on the first column. That's given us 6,000. Then we were told in the additional information 3 that salaries, rent, and rates are to be apportioned. Like I said, apportion means to share basically and expenses between two or more departments. So we are going to share the salary between factory and office. And we're also going to share rent and rates between factory and office in the ratio 3 to 1. So 3 of that salary will go to factory, that's factory salary. And 3 of the rent and rate will go to factory rent and rates. So this is what we have. So since the expenses, the amount that was given as salary is 20,000, and we're given 3 ratio 1. 3 ratio 1. So 3 is for factory, 1 is for office. So for factory now, to get that, so let's work that here. So we have factory salaries. So factory salaries, we are going to have, since factory is 3, so we are going to have 3. Then the addition of this is going to be 3 plus 1, that gives you 4. Then divided by 4, the total. Then times the amount they want to share, which is 20,000. 20,000. Then 3 times 20,000 divided by 4. That gives us 15,000. So 15,000 of the salary is allocated to factory or is apportioned to factory. So that's with respect to factory salary. Then factory rents and rates. We also have rent and rates. So we have factory rents and rates. So the same, we have 3 over 4 times the rents and rates given. The figure is 12,000. 12,000. So 3 times 12 divided by 4. That gives us 9,000. So 9,000 of 12,000 will be apportioned to factory. And the remaining 3,000 will be apportioned to office. And the remaining 5,000 of this salary will be apportioned to office. So that's with respect to that. So there is no other expenses that should be apportioned to the factory. So these are basically the factory expenses or factory overheads that we have. So here now we have this. So this total now, that should be 30,000. 6 plus 15 plus 9, that's 30,000. So 30,000 plus. So we had our prime cost with factory overheads to get our cost of production. So 30,000 plus 268,000. That gives us 298,000. So this we call gross costs of production. Gross cost of production. This is what we have, gross cost of production. So this should have been our cost of production, that's factory cost of production. But because in a manufacturing concern, we usually have work in progress. That means goods that the production have not been completed. So we are going to add and less. So let's do that now. So I'll continue from here. So we have our currency sign. So let me bring this here. That's gross cost of production. Cost of production. We have that as 298,000. Then we had opening work. Opening work in progress. Opening work in progress. Opening work in progress. That's given at the beginning of the question. That's 15,000. 15,000. So we had that plus 15,000. That's 313,000. Then we less closing work in progress. Work in progress. So closing work in progress is given in the additional information as 14,000. So 14,000. 14,000. So we less that minus 14,000, and that gives us 299,000. 299,000. That's what we have. Then, since this is our cost of production, so we call this factory factory costs of production. Factory cost of production, or we can call it production costs. Production costs. So this production costs, and don't forget in the additional information, that's additional information one, we're given goods were transferred to the trading account at a market value of 390,500. That's the market value, the selling price. So that means what we are asked to determine in this question is the profit element on manufacturing. So the cost of production is lesser than the market value. So that means we arrive at, or we get a profit on manufacturing. So let's leave a space, just like we did. So these are market value. So the market value given in the question is 390,500. So to get our profit element, that's profits, you will not be told to get the profit element. But how do you know that there is profit element? As long as your market value is greater than your cost of production, you are going to be having profits on manufacturing. So profits on manufacturing. Profit on manufacturing. So how do we get that? That's this minus this. Then you're going to have this. That's the market value minus the cost of production. So that's 91,500. So 390,500 minus 299,000. That gives us 91,500. So this is where our manufacturing account stops. Then we now proceed to preparing our trading accounts, which is about finished goods. So let's start now. So you don't need to leave a line basically, just continue. So we have sales, sales of finished goods, sales of finished goods. So sales of finished goods in the question were given as 590,000. So 590,000. Then if there is return invoice, we will less it. But in this question, we're not given anything that has to do with that or that relates to that. So then we less cost of sales. Cost of sales. Then we have opening stock. Opening stock of finished goods. So that's given at the beginning of the question. That's 59,000. 59,000. Then we have add purchases. Add purchases. Now don't forget, I did say that the purchases will not always be given. The purchases figure will not always be given. So whatever you get as market value, you bring it here. That will be your purchases. But if in a question you did not get the market value, that means you're not going to get profit element and market value. So this cost of production will be your purchases. But if you're given market value, which we're given in this question, so this is what we are going to be using as our purchases. So I hope that is understood. So purchases now, I just want to note it there. That's market value. So that's 390,500. Then if you are given any additional finished goods purchase, you had it. But in this question, we're not given. So we had this too. So that's 390,500 plus 59,000. That gives us 449,500. So 449,500. So we call this costs of finished goods. Cost of finished goods available for sale. So finished goods are for sale. Raw materials are for use. So this is what we have. Then we less closing stock. Another one for stock is inventory. So closing stock of finished goods. Closing stock of finished goods. So that's in the additional information. That's 26,000. So we have costs. Costs of finished goods. Cost of finished goods sold. Then that's 449,500 minus 26,000. That gives us 423,500. So 423,500. That's our cost of finished goods sold. Then we less it from our sales of finished goods. Then that will give us gross profits. Gross profits on finished goods. Gross profit on finished goods. So minus, so our profit is 166,500. So these are gross profits on finished goods when we sold it. Then there will be two gross profits here. So you bring this gross profit on manufacturing because this is where trading account stops to get our gross profits. Then to start our profit and loss accounts now we have to prepare profit and loss accounts. So we have prepared trading accounts. It stops here. Then to start our profit and loss account, we will now have to add these profits on manufacturing before we now add other incomes. Then we will less our expenses to get our net profits. So let's add our profits on manufacturing. So add profits on manufacturing. Profit on manufacturing, and that's given us 91,500. So let's add this two. So 166,500 plus 91,500. That gives us 258,000. Then if there is any other income like discounts received, commission received, decrease in provision, you are going to add it to this total income or total profits. So these are total profits. Total profits. Then to get our net profits now, we will now less all other expenses. So after that, we get our net profits. So I need to rub off these parts in order for us to be able to continue with that. So should you want to have a glance at this, I think this is understood. So let me rub off this part. I hope you all can see that. So good. So so we have our currency sign. So we have our expenses. Expenses. So the expenses we have here. So we have delivery expenses. Delivery expenses. Delivery expenses. That's given us 4,000. No adjustment on that. 4,000. Then don't forget additional information 3. Salaries. We've apportioned 3 to factory. And the remaining one now, we are going to apportion it to office. So those are indirect expenses. Office salary is indirect, but factory is direct. Yeah, direct basically. Yeah. So let's go now. So we have office office salary salaries. So office salary now will be one, which is one ratio one divided by the total. That's 3 plus 1. That gives us 4 times. So the salary is given as 20,000. So 20 divided by 4, that's 5,000. So we've apportioned the remaining office salary. Then office rents, office rents, rent and rates, rent and rates. So it's also 1, that's 1/4 times The rent and rate given in the question is 12,000. So 12,000 divided by 4, that gives us 3,000. 3,000. So there seems to be no other expenses, office expenses. So I don't think there is any other one. So in the absence of none, then the total expenses now, that's 9,000, 12,000. So 12,000, that's the total. Then we less that from our total profits. So then we get our net profits. So net profits, so that's 258,000 minus 12,000. So that gives us 246,000. So these are net profits, which we are asked to uh, get in the profit and loss account. So your net profit is total profits plus other incomes. If they are given in the question, then less expenses, total expenses, and total expenses is 12,000. So 258 minus 12,000, that gives us 246,000. So that's the solution to the question on manufacturing accounts. I think with this solution now, you now have an all-encompassing understanding of manufacturing accounts as a topic, uh, ranging from the definition, the terminologies, the formats, then now solving a question. So this is where we're going to be drawing the curtain for today. Continue to support us in any way you can. If this is the first time you are watching our video, subscribe to our YouTube channel, like our videos, and don't forget to share to anyone whom this video might be of interest to them. Perhaps JAMS, WAEC, ATS student, that's Accounting Technician Scheme of West Africa, those students, and any other students who has interest in financial accounting. So what more can I say? I will see you on my next video. You have a good one. Bye bye.